In this video, we're going to be going through Fibs, also known as Fibonacci Retracements, and also Fibonacci extensions. So, to go through this, what are Fibs and how can we use them? So, firstly, Fibs, how you access them. For example, if you're using TradingView, just go over here, Fibonacci Retracements. Again, if you're on Thinkorswim, pretty similar. You right-click, add drawing, Fibonacci Retracements, and then you click from where you want to start drawing to where you want to enter the drawing. Now, TradingView, I just have less stuff on the chart. That's why I'm showing you on these, just because then it'll be easier to draw and nothing's cluttering the chart. So, what you would normally do is you find a range of a high or low that you want to use. For example, on the 14th of August, you had quite a nice run up here in price. So, what we could use is a fib here to find out potential buy areas and potential targets. So, what you can do is you go from candle low to candle high, or depending which way you want the extension. So in this case, you see price moved up, so we're looking more at upside targets. What you instead can do is fib candle high to candle, you can do candle high to candle low, and what you'll see is this will draw a lot of lines on your screen. Now, if you want your fib set up the same as mine, all I have on there is the 38.2, 0.6, 0.5. These are the key levels, and that's why they're in gold. We also slightly have these ones on. We don't really trade off of these, so you can even turn these off, which I'll do for this example because we're not really going to use them. And then we also have 2.6, 4.2, and 1.6, which are used as extensions. So these are retracement levels. So these are the retracement levels. These are the extension levels, and we'll go through how you use both of these. So again, extensions and retracements. So, how you use these then? So you fib out an area, again, candle low to candle high. You see this golden range. So what this golden range is the 61 to 38% level, and what this tends to be is a good area pullback if you want to continue trend. So in this case, you had a nice strong move. Do you think trend is going to continue? If so, this range here can normally be a good long, and you normally tend to use at the bottom too. So in this case, you'd be looking at this range here to get long. So that's the retracement element of Fibs. Now, what are these green lines up here? Now, these are known as the Fib extensions. And what you do are they essentially give you targets from the range already created. So again, we've created this range here. So it's showing you what are the extensions and targets you can use from this move. So we have our first target here, which hits and goes through. And in this case, you get your second target, which ends up being not only a target, but also a nice pullback location. So again, fib retracements down here. So retrace. And then you have targets, which are going to be the extensions. So that's the two areas of Fibs that you're trying to pay attention to. I will use this somewhere else, and again, use different examples on how you can use this. So, another example, and again, we're just going to use random days. For example, here, you have the move of a day. So you could go from candle low to candle high, and we can start seeing how these react. So again, we go over, we grab the Fibonacci retracement. Again, because price is going up, you do candle high to candle low. So again, our low is there, our high of day is there, and we can start seeing again how do these play out. So in this case, we get no retracement, so there's nowhere to really kind of get in around this area. And if you don't come back to these areas, the way you can see if the fib is holding is the price break above, which it does here. You come back, you retest, and you should hold this level if the fib is valid. Then what you can see is the same thing, target, tick. Do we come in to hit the next one? You kind of break above it, but again, it's used as target. And in this case, that's it for now. So that's another example. Again, we'll do another one. How do you do fibs for the downside? So for example, this day here, we'll fib out this day. So price is down. So what do we do for when we do up candles? We draw the up candle first and then draw down. So we're going to do the opposite. We're going to draw the bottom of the fib and then draw up to the top of the fib. And again, this is going to give us extension to the downside. So again, this is our fib area. First target, second target. And what happens? you kind of break below this one, and again you kind of get your bounce on your second one. Again, the 261 can be a nice bounce area, and if you can push all the way down to the 423, that's going to be a really nice bounce area normally. Again, you can see the same thing. You bounce off of those fibs, and then you break back into them. So again, the same thing, retracements and fibs. We'll try and find one more example. I mean, again, you can do these on any days. It's just one I'm trying to find where it comes into the fib retracements. So what we will do is, and this one actually would probably be a fail, so we'll try this one out. So here, you fib the day. Again, candle low to candle high. What you can see in this case is price comes here, you kind of break out the fib slightly, but it fails. You come back into this golden area that we would normally look to short, and in this case it comes in, fails, you kind of break through. So this is an example of a failed fib. However, these will always still stay as targets. All fibs do get filled eventually. So you can use these as targets later on, but again, they're not going to be as clean coming to look at in a different point. Now, fibs as well, it's very subjective, and that's always the problem I find with fibs. It's not like a moving average. It's not even like a VWAP, which is set in stone and not subjective. Fibs are very subjective on where you place them from. Some people may look at them from an intraday. For example, some people might even look at this move as an area to fib. And so things can be different. Again, you kind of come into that golden pocket, you get a bit of a bounce. But they are very subjective, so I would never use them as your only tool. I would instead use them with something else and see if they work in conjunction. What that means is, for example, say we had a 200 moving average here. You had, we'll try and make it, but again, we'll try to force it, but that's just because we're going through an example. And say, okay, so you've got your 200 moving average here. You've got your, now you've drawn your fib and you've got a fib here. Now that's your kind of area you could use as a resistance to then short. So again, I would normally use them in conjunction and not the only thing, just because they are subjective, which again means that you may draw them very differently to someone else. It's not going to be the exact same. But a 200 SMA is going to be the exact same for every person using it if they're using that same time frame. For example, a 5-minute 200 SMA, everyone's going to see that the exact same. Anyone who's looking at it will see it the exact same. Your fib, someone might have drawn that range. Someone else might have drawn this range, and then you can see that changes it again slightly. Someone might be using that high and looking for the extensions on there. Someone else might use that one. So again, they are very subjective on how you get your levels. That's the only drawback really to fib. So if you got a nice strategy in place, you can try using fibs alongside it, and you're seeing if you can kind of add some confidence to a strategy or add some confluence, which again is just things working together with fibs. But again, I would never solely rely on fibs for a strategy, just because again they can be very subjective. The only way you might be able to reduce that subjectivity is if you're using them or anchoring them off something key that everything or other people will be looking at. For example, if we use a Disney, for example, they have earnings. Obviously, all stocks have earnings. You can fib the earnings move. So again, fib, you go from candle open to close, because in this case, again, it is a gap down. So again, you're fibbing that way around. And again, what happens? You come down, you hit your target, nice bounce. You come back in, golden pocket. You then short. So again, holding that fib. You come down, what do you hit to really nicely? You hit that fib, you bounce, you test your fib, retest as a resistance. And again, we're seeing if we can hold it. We're holding it. We're holding it. We keep coming back. This is our only resistance here. And again, we test it so many times, we just can't break down. It finally comes back into the fib range. And again, you're even getting nice bounces all throughout here on these fibs, because it's a very respected fib, and it's a fib other traders are going to be looking at. You know, that's just one example. We can even try, for example, a Tesla. See what Tesla's doing off it. I haven't even looked at the Tesla one, so I don't actually know how this one plays out. But again, it should be some sort of the same thing. So again, you can do candle open to candle close. So again, that red candle opens there, the red one closes there. See, how does this play out? We open up, again, we test our fib range. Start to push back down, back comes back in. Okay, we're coming into our golden range. And what's happening? We're shorting off here. So we should hopefully come down and either test it again or hit our target again. Testing it again. Will we hit target? There we go. We hit target in this case again. That's your short range. You target the fib. What happens here? We gap below the fib, so it kind of comes and retraces it for a bit. And again, I think that's going to be it for it. Again, you kind of fail. Again, 2618 is normally going to be a nice reversal level. So normally this one is target. Don't normally try and flip them too much unless you try and scalp a bounce. This can normally be used as a nice reversal level, and in the cases you get them move all the way down to 423. Again, that's going to be a nice reversal level. We'll go through one more example just to show you. Again, this is going to work on all of them. Again, not always as clean as those ones. They were actually kind of just good examples. We'll try an Apple. In case of Apple, again, you probably don't want to use this earnings because it didn't really move. So I wouldn't really bother on that ones like that. So again, we can look at something else. Just trying to think of any kind of big stock off the top of my head. Maybe a Microsoft. Let's see how that reacts off earnings. Again, a pretty lackluster move off this earnings. So again, something you're not going to want to fib these kind of moves. You're going to want to fib big moves. Just check a Pfizer. I mean, a Pfizer should have a big move on earnings. I say that, and not a big move. I'm just trying to really think of any names that kind of move on earnings. We'll try Johnson & Johnson. Johnson & Johnson, again, relatively small moves because you're looking from candle close to open. In that case, quite a small move. So we'll just keep going until we find anything. Again, when you've got the actual earnings, you're looking at them, and you'll be able to see which stocks have earnings that day. And we can see, I mean, we can go see GME that should move on earnings, surely. I don't know why none of these stocks are really moving off earnings. Really, just nothing is moving off earnings right now. So it's not really being that clean. This is just having a massive gap in it. So yeah, I'll just see if Airbnb had earnings. Oh, Airbnb. Okay, cool. Airbnb had a nice move on earnings. We'll fib out this one as a last example. So again, candle open. So you're going from that red open to the candle close. And again, what you're going to be looking for then is a retest of this area, looking to short down to targets. Again, you will get some fails, but that is normally the overall trade plan. So you can see you're kind of touching the top of that fib. You're getting a bit of a pullback, but we haven't quite gone down to targets. And again, it is quite a big move. I mean, that is 17-point drop, roughly, point drop to get into there. Try and just find actually like another one we can use. NVIDIA. NVIDIA should have moved off earnings, surely. So we can kind of have a quick look to see if it has. Where is earnings? Earnings. Okay, cool. In this case, doesn't look like we would have came back into the golden pocket on this one. Again, sort of the same trade plan. You're going candle. Oh, sorry. Going candle high to candle, or candle open to candle close. What happens? Again, you hold the fib target. You now break the target, next target hit, bit more consolidating, and see if we can come out and actually hit. Perfect example of the 423. Great example to finish it on. Again, if we come here, normally a nice reversal level. What happens? Near enough to the penny. Nice drop off there. And again, we can kind of see what sort of drop you're getting on these. Because with these, you can normally have tight risk. Again, and even if you're wrong, the ones that do work will make you a good money. So in this case, it went offside like 1/4%. And even if you just trade that same intraday move, did about 5.5%, which would have given you around a 7-to-1. Again, obviously you're not going to know that's your exact risk, but even say you risk a 1% on the trade, or 1% of a NVIDIA move, so you know, a point and a bit. So you target 5 points. Again, that's still going to be a 6. Or again, even if we just do a 1 to 5 risk to reward, that will be there to there. You go. You've got that risk. All downside. Nice trade. Again, if it comes for it again, then that's when it can go a bit more parabolic. So you're normally best off staying away from that unless you're refibbing a new move. So again, I'm surprised they don't have earnings anymore recently that we could have fibbed. But I guess not. But again, it's the same example over and over. The earning moves are quite nice for stocks to be able to use both targets and retracements. So I thought I'd go through that. I hope that is quite simple to understand, Fibs. It's a bit of a longer video, but again, I kind of want to just go through examples because I think the examples make it as clear as possible.